Welcome to Talk Tickers. Today we're doing a deep dive into the Q1 2025 earnings information from Virtra. Now, this is a company in a really interesting, though definitely challenging space. Simulation and training tech for law enforcement, military, government agencies. It's a market that, well, it really moves to the beat of public funding and changing priorities.
Exactly. And what's great about looking at an earnings call like this is you get a direct line, sort of unfiltered, into how management sees things.
Right. How they talk about performance, strategy, the headwinds they're facing.
And for you, the listener, it's a great way to understand what it actually takes to operate in these government markets right now. It's a real snapshot.
Okay, so let's jump right in. The Q1 2025 results snapshot. First up, revenue. Came in at $7.2 million.
Which is actually a slight dip compared to Q1 last year.
Yeah, exactly. And, on the surface, maybe that looks a bit soft, but you really have to dig into the rest of the numbers. Things get, well, pretty interesting further down.
They really do. Because despite that revenue number, gross profit, that jumped significantly, $5.2 million.
And the margin.
Huge improvement, up to 73%. That's up from 64% same time last year.
Wow, 73%. That's a really strong margin, especially when there's hardware involved. What's driving that?
Management pointed straight at operational efficiencies and a big drop, like 25% in their cost of sales year over year.
Okay.
So it tells you they're not just, trimming around the edges. They seem to be making some real fundamental improvements in production or sourcing. Getting 73% gross margin here, that suggests a pretty solid execution on cost control.
Yeah, and gives them a cushion, right? When revenue timing gets tricky.
Exactly. And you see that flow through. Net operating expenses were down too by 6% to $3.8 million.
So better gross profit, lower operating costs. The leverage is pretty clear. Operating income more than doubled, up 110% to $1.4 million.
Precisely. That execution hits the bottom line hard. Net income was $1.3 million. That's 0.11 cents per diluted share. A 170% increase year over year.
Huge jump.
And adjusted EBITDA also looks solid, up 22% to $1.7 million. So yeah, profitability, efficiency metrics looking quite strong, even with that slight revenue dip.
Which takes us to sort of the forward look. Because while Q1 revenue maybe felt the timing issues they mentioned, deliveries pushed into Q2.
Right, from orders booked late last year.
Yeah, but the forward indicators are different. Bookings in Q1. Really strong year-over-year growth.
Oh, yeah, really strong. Might be underselling it. Bookings more than doubled compared to last year's Q1, came in at $6.4 million.
Okay, $6.4 million in new bookings.
And that's where you get the visibility, right, into what's coming down the pipe.
Yeah.
That Q1 number pushes their trailing 12-month bookings to $33.4 million, and the total backlog now stands at $21.2 million.
Yeah, backlog. So that's work they've won but haven't delivered or recognized revenue on yet. How's that broken down? Is it all big systems?
It's split three ways, basically. You've got capital projects, those are the big simulator sales, then services and warranties, maintenance, and their STEP program, which is the subscription offering.
God.
The fact that bookings are so strong and the backlog's over $21 million, it signals demand is definitely there. The revenue softness in Q1 wasn't about losing deals, it seems, more about timing, like they said, getting those systems delivered and invoiced, especially on deals won late last year.
So business is coming in, it's just the pipeline flow, getting it out the door and onto the books is facing some delays.
That's the picture, yeah. And they finished the quarter financially pretty solid, $17.6 million in cash, not much debt. Gives them flexibility.
Okay, so let's unpack that environment then. Because that seems to be where the rubber meets the road on those delays.
Yeah.
The CEO talked about some significant macro headwinds.
Yeah, they did. Pointed to, the usual suspects, economic uncertainty, shifting agency priorities. Frankly, tighter government budgets.
Standard challenges, maybe?
But the really critical ones hitting them now seem to be delayed budget approvals, holdups in grant money getting allocated, and just generally longer sales cycles. They even mentioned funding getting held back because of things like internal agency reviews or leadership changes at the customer.
Oof, that sounds like a nightmare for anyone selling into government. Why are those specific things so disruptive?
Well, think about it. Government buying isn't like B2B sales, right? Budgets are set way in advance, go through layers of approvals, subject to politics. Economic jitters mean agencies get cautious about big capital spending. If the budget approval gets delayed or the grant money isn't released, the agency literally can't spend the money, even if they want the system now.
Right. The intent is there, but the mechanism isn't.
Exactly. And a leadership change or an audit, that can just freeze spending decisions for months. It makes predicting when a deal closes incredibly tough, stretches out those sales cycles.
Navigating a minefield, like you said. So how are they fighting back? What strategies did management talk about to, deal with these pressures?
They're hitting it from a few angles. First, really sharpening their value proposition, hammering home that they're a trusted partner with mission-critical stuff.
Making themselves essential.
Right. Aligning what they offer very tightly with the high-priority needs agencies have to fund, even when budgets are tight. Things like de-escalation training, use of force, homeland security stuff.
Makes sense. What else?
They're also getting more tactical, trying to anticipate procurement cycles better, engaging earlier in the budgeting process. They specifically mentioned leveraging things like the fiscal 24 burn jag.
The end-of-year spending spree.
Exactly, that sudden window. They also mentioned targeting Homeland Security grants, aligning with DHS SAFER initiatives, DoD-Q1 obligation targets.
So being really specific about tracking where the money is and when it might shake loose. That burn jag point is interesting, trying to catch funds before they expire.
It's critical. It's often a very narrow window. Being ready for those specific, sometimes small funding streams, whether it's year-end money or targeted grants that shows real tactical focus, it's about being there the moment funds are available.
And helping the customer find the money too, right? By pointing to specific grants.
Yes, absolutely. Helping them navigate their own funding maze to buy your tech. It's a smart move.
Okay. Any other big strategies?
Well, maintaining that fiscal discipline we saw in the numbers. Lower OPEX, better profits, that's internal control.
Right.
And externally, using streamlined buying paths. Getting on the GSA schedule was a big one this quarter, and pushing sole source opportunity.
Yeah, GSA. That helps bypass some of the lengthy bidding processes, doesn't it? Directly addresses that longer sales cycle issue.
Exactly. It cuts through red tape.
Right.
Makes it easier for an agency to buy once they do have the funds approved, reduces friction.
Smart.
And, crucially, offering more flexible ways to buy. Expanding their step subscription model, introducing standardized bundles.
Okay, how does that help, especially with relying on those big, lumpy capital projects?
Yeah, that's key. Subscriptions or smaller prepackaged bundles, they might let agencies use operating budgets or smaller grant pots. Those often have easier, faster approval paths than huge capital requests.
Okay, so instead of waiting for a multi-million-dollar budget line.
Right. Maybe they can get a smaller bundle or a subscription approved more quickly using different money. It helps smooth out revenue, makes them less dependent on those big, unpredictable deals landing perfectly. It's about making it easier for the customer to say yes with the money they actually have available right now.
That makes a ton of sense. Easier to digest. Okay, let's shift to the internal side. What changes are they making in sales and marketing to make all this happen?
Pretty significant restructuring in sales. They moved to a regional model, brought in new leadership. The idea is better accountability, better responsiveness, getting sales folks closer to their specific agencies.
Makes sense. Boots on the ground, regionally.
And optimizing sales efficiency internally too. Better management systems, refining outreach, clearer follow-up, all aimed at shrinking that time from first contact to signed contract, which is vital when the overall cycle is already stretched.
Definitely.
And externally, beyond just getting on GSA, those standardized product bundles we mentioned, they're designed to match common needs and make it easy to buy through GSA or sole source, streamlining procurement and fulfillment.
And what about marketing? What's the overhaul there?
Big focus on digital, improving the website usability, making it easier to find info, request demos. They're tracking campaigns better, focusing on ROI, especially from partner platforms.
See your results?
Sounds like it. They mentioned getting more leads at recent events like Border Expo and SHOT Show, so the revamped approach seems to be working, generating more qualified interest.
So more targeted, more efficient marketing spend.
Exactly. Building a much more disciplined, data-driven way to handle leads. Structured capture, systematic follow-up. Really focusing on conversion rates and knowing their customer acquisition cost.
No leads falling through the cracks during those long waits.
Hopefully not. It's also about better integrating sales, marketing, and CRM internally. Better alignment, consistent messaging, using CRM reporting for visibility and accountability across that whole complex journey.
Yeah.
It's really foundational work, getting ready for growth when the external factors ease up.
Okay, let's pivot to the tech itself. They talked a lot about VXR, their extended reality platform. What's the latest there?
VXR is definitely a big strategic push for them. They're seeing growing interest. Sold 2 units already. First delivery is expected this quarter, Q2.
Yeah.
And several more are in active, quote, discussions. They said customer feedback is positive, liking the flexibility, accessibility, the fidelity.
Flexibility and accessibility seem like big deals for XR training adoption.
They really are. And Virtra is working on expanding headset compatibility, streamlining deployment, just making it easier for agencies to actually use it. They're positioning it as their next generation tech.
The future direction.
And importantly, they mentioned they're actively helping agencies with grant applications and approvals specifically for VXR systems. Again, linking back to helping customers overcome those funding hurdles.
Yeah, that's a really smart assist. Not just selling tech, but helping them figure out how to pay for it right now.
It absolutely is. And beyond the VXR hardware, they're focused on the core platform and maybe most importantly, the content library.
Right, the scenarios.
They're converting their huge existing library of training scenarios for VXR. They expect that process to help drive VXR sales as specific funding for XR tech becomes clearer for agencies.
You mentioned a huge library. How much certified content do they have now?
They said over 120 hours of certified content is available now. And here's where tech's giving them a boost. They're using AI tools more to speed up content development.
AI. How does that work for creating training scenarios?
Yeah.
Faster scripting.
It can help with a lot, actually. Developing realistic branching scenarios is usually super labor-intensive. Scripting, filming actors, programming outcomes, getting it all certified.
Yeah, sounds complex.
AI can help draft initial scripts, maybe automate some basic character animation, generate voiceovers, quickly create variations on scenarios. It cuts down the manual work significantly. Management actually mentioned an unexpected acceleration in creation pace because they're integrating advanced video, motion capture, and AI tools.
So they can react faster to new threats or training needs.
Exactly. Create relevant training faster based on current events, customer feedback, things like community interactions, de-escalation tactics. That speed and relevance, plus the certified quality, that's a key advantage.
Very interesting intersection of tech, training, and business ops. Okay, let's shift to operations and a big partnership, IBS. Any internal facility improvements?
Yeah, they've been reconfiguring their facility, getting ready for future scalability, basically, adding space for reliability testing, expanding the assembly line. They're also bringing in lean manufacturing processes using lessons learned from tough testing cycles, like on IBS. It's about quality and efficiency at higher volumes.
Okay, and speaking of IBS, the Army partnership, big program, what's the latest there?
Good progress. In Q1, they finished validating the advanced recoil kit that's key for realistic weapons simulation and training. They've also started reliability testing, getting ready for potential production phases down the line, and a really big milestone they called out, the official contract transition for the whole IBS program from Microsoft over to Anduril.
Anduril. Big name in defense tech now.
Right. And Virtra's tech apparently did really well in the final R&D phases under the old contract. Exceeded expectations, actually, which led the Army to wrap up soldier assessments early.
That performance track record has got to be huge in the DoD world. How does this IBS stuff connect to bigger shifts in defense strategy?
It's perfectly, actually. The DoD is really pushing for speed, modernization, readiness, things like the adaptive acquisition framework, using OTA agreements, those faster contracts, and pushing for modular open system architecture.
Meaning systems need to be interoperable, easily upgradable.
Exactly. It's all about getting innovative tech deployed faster, breaking down old bureaucratic hurdles, favors companies with agile, adaptable tech.
So Virtra, with its focus on modular systems, high-fidelity simulation, they're pretty well positioned for that shift.
Seems like it. Management certainly thinks so. They believe this DoD focus on speed, combined with their strong performance on programs like IBS, sets them up well for more engagement, maybe faster procurement, and wider access in defense as these reforms really take hold, plays to their strengths.
Okay, so pulling it all together, what's the main message for management coming out of this Q1 call?
I think the core message is pretty clear. Q1 showed continued solid operational execution. They're managing things well internally, efficiency, strategy, despite those government funding constraints really being a headwind for the whole sector.
Right. External pressure is real.
But they believe they're building a more agile, more effective organization, getting better equipped to actually convert that growing backlog, support growth when it comes, and meet customers' evolving needs. They feel they're executing decisively on the things they can control.
So it's kind of a story of building internal muscle to weather the storm and be ready when conditions improve. Key strengths we talked about. Those impressive gross margins, back to GAAP profitability, the booking momentum is strong, good backlog visibility.
Plus the strategic sales and marketing changes, the tech edge with VXR and AI content, strong performance on IBO, aligning with DoD trends.
Lots of internal positives. But the key challenges remain external. That persistent government budget uncertainty, delayed funding, and the resulting long, often frustrating sales cycles.
That sums it up pretty well. They're controlling costs, execution, tech development, and the profitability shows it's working. But yeah, they are somewhat at the mercy of that external funding tap turning on.
This is Talk Tickers, and this next bit is not financial advice. We've just unpacked Virtra's Q1 2025 earnings call, the numbers, the tough environment, their strategic moves. We saw strong internal work driving profits and bookings, but bumping up against those external government funding delays. Now, given that dynamic internal strength meeting external timing issues, how might you, the listener, think about the potential implications here purely from a market analysis standpoint?
Well, purely as an analytical exercise, right? Understanding that link between strong bookings, the growing backlog, and the delayed revenue conversion is crucial. It suggests demand's solid, they're winning deals, managing costs, but the timing of revenue is the big unknown.
Right.
So an outrageous but plausible thought experiment, just for discussion, could be thinking about catalysts. What specific signal might unlock that revenue stuck in the backlog? Is it Congress passing a budget, a big grant program finally releasing funds, maybe a key agency getting new leadership that frees up spending? Based only on what we heard in this call, you could speculate that any positive news on government funding, say, a faster than expected budget resolution or a large grant flowing to law enforcement or DoD, could potentially trigger a significant, maybe even disproportionate pickup in revenue conversion in future quarters. It could lead to an acceleration maybe beyond what current run rates suggest.
So kind of a bet on the timing, essentially. When the external environment finally syncs up with their internal execution and the demand signals they're already seeing in bookings?
Potentially, yes. That's one way to frame the analytical thought process based on this specific information.
Interesting way to connect the dots. And just to reiterate very clearly, this analysis is purely for informational discussion, based only on the earnings call commentary. Investing involves significant risk. Always do your own thorough research and consult a qualified financial advisor before making any decisions.
Absolutely critical.
So this Virtra deep dive really underscores how companies in these critical but challenging government markets have to adapt. Sharp operational focus, smart strategic positioning are key. It shows you need to understand not just the P&L, but the whole market context.
Definitely. And maybe a final thought for you, the listener, to chew on. Given those ongoing budget challenges and long sales cycles, how else could a company like this innovate its contracting or delivery models? What other creative ways might they find to de-risk that reliance on big, lumpy capital projects and maybe unlock more predictable revenue, even when the usual funding paths are clogged? Something to think about.
Great question to ponder. Thanks for joining us for this deep dive. We'll continue to unpack the information that matters for you.